Free radio for a really great future. We're talking real money.
And the people with whom you should be talking real money are right here, right now for you. Me, Don McDonald, in Florida, and him over there, Tom Cock, in snowy western Washington.
Yeah, let's pile it up. Keep
Let
it coming,
let it snow.
Yeah.
Just,
truck it on in.
You were complaining about no mail delivery. Look at the bright side. Is there ever anything
bills
in the mailbox that's any good?
That's good. Yeah, my newspaper from like Wednesday, if you don't mind.
I'm sorry.
If really you like to read that 3-day-old news,
if you would just get with the times and read the darn stuff online like everybody else.
I do both, but yeah, I feel like I miss stuff when it's not in printed form right in front of me.
I'm old school. Darn thing.
I'm from the old school. I'm sorry. So.
Yeah, you're from the way too old school for your age. How did you get to be 85 at 60-something?
I don't know. That's just one of those things. It's a mental problem.
It's you even like older music.
That's true. I do.
I don't get it. All right.
The swing years.
Yeah. And speaking of old people.
Yeah.
A lot of old people, like us and older, have discovered that they made some big mistakes when they were younger. There's a big surprise, huh? A recent study was done by an economist at Hebrew University in Jerusalem and another one at Wharton in Pennsylvania.
Place.
Yeah. They talked to older Americans about financial regret.
Over the age of 50.
And this is no surprise. The number one financial regret was not having saved enough money.
57% wish they'd saved more. And by the way, I wish I had saved more.
Me too.
Yeah, no, I mean, I look at my situation. I wish there were opportunities to do so. And now, in my later years, I'm doing a better job of it. It's all automated too, of course. It comes out of the check, blah, blah, blah. You get the match, it's gone.
Well, yeah, and
I wish I had done more of that at 25.
This survey was people who were over 50. So those that are just over 50 or under 65 or 67. Hey, let me explain something to you.
Yes.
Neither Tom nor I had much of anything saved prior to age 50 because we were serial entrepreneurs. And
that's true.
And serial entrepreneurs have boom bust cycles, so to speak.
They definitely do.
Boom bust.
We've had them both.
But let us tell you from experience that if you knuckle down, if you put your shoulder to the wheel, your nose to the proverbial grindstone, that
which you
wealth,
can see I have.
Wealth can be built, enough wealth to retire comfortably. It's not.
By the way,
it ain't over.
No, the average age in this survey is 72. So, 57% said they wish to save more. That was number one. Number two is a bit of a surprise for me. 40% said they wish they had purchased long-term care insurance.
I think that
now, I don't
in large
know if those
part,
are
I think
people
I get
necessarily.
That, though. I think
because they wish they had it.
Right, they wish they had it.
They haven't used it yet. Yeah.
Right, but they I think it's more of a, it used to be pretty cheap before the insurance companies found out how expensive we were to take care of. And
bingo.
And so they had to raise the prices and I don't want to pay those higher prices, so therefore my regret is I didn't buy it when it was cheap. Well, you didn't buy it when it was cheap because you didn't think you'd need it because you were young. Right?
I think those are all fair things. Yeah, right, sure. And I don't know.
Short-sightedness.
Here's the reason I don't want to have it, because I just feel like it's difficult it just feels complicated. And it doesn't feel like necessarily you have it doesn't mean you're going to be okay either, by the way.
No, it doesn't. As a matter of fact,
I've seen it
some of the new hybrid products only have very limited daily payments. They only pick up $100 a day. And anymore, I was reading an article on long-term care recently where they were talking about $10,000 a month long-term memory care in some facilities is nothing more than a room with a locked door.
Which side's the lock on?
On the outside.
Oh, okay. I'd prefer not to spend that kind of money on that kind of room. Number three, this is kind of interesting, and I don't know if I understand if this is I guess it's a financial decision that it makes sense. 37% said they regret not working longer. So I guess they meant that they retired too soon. They could have save more or not had to
I'm
draw
not
their
sure
savings
because it's such a short paragraph that Brent Ahrens from Barron's did. But I think part of it, there may be a combination, because I have a lot of friends who are fully retired, and they regret not having something to do. That's the thing. So don't regret if you're younger. Start planning. Really, it all boils down to not having a plan, which is what we repeat over and over again. We'll be back. 855-935-TALK. That's our number.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Hi, welcome back to our get-together radio show and podcast called Talking Real Money, where we, guess what? Talk real money. I'm Don. That's Tom. 855-935-TALK is our phone number. And waiting patiently on our super spectacular money line is Gina. Hi, Gina. Welcome to the show.
Good afternoon. Thank you for having me. I need to make some financial decisions, and I'm not really sure what kind of advisor I should see, if it's a fiduciary that you guys talk about or a tax attorney, CPA, all the above. And basically the scenario is I am one of 4 partners in an LLC. I'm getting ready to retire at the end of next year. At that time, I can sell out, have a complete buyout of my shares, or I can retain 10% for 10 years and be like a silent partner, basically, and receive profit sharing during that time. Mm-hmm. Which sounds like a good deal, but I'm just not sure of all the tax implications, capital gains, legal agreements. Do I need to kind of seek advice from multiple people, or
well,
is
not?
Kind of
and I honestly, I don't think it's from. I don't think it's from a financial advisor yet. Because this is a CPA, actually probably a tax.
Well, now, right, but our firm, for example, has advisors, and we have CPAs in it, so you could get one.
Well,
stop.
true,
I mean,
yeah.
We're not the
but
only.
You also need
somebody.
You need somebody who, though, you can have an attorney in here. I think
you're going to have them look at the agreement. Where are you? Where do you? What state do you live in?
Washington.
Okay. I mean, another thing now to consider, too, is, of course, we have this wonderful 7% capital gains tax in the great state of Washington that will start being collected, I guess, the first of the year for whatever gains in the year 2022. And, Don's right. You need a lawyer. You need a CPA.
And sometimes
I'd say
they're
an
one and the
advisor,
same.
too, because you got to make some decisions about whether to keep some of this money in the firm or cash it all out. There's some aspects of that. So, yes, to all of those. If you don't know somebody, then I think a reasonable place still to start would be a 100% fiduciary advisor, because they will have relationships.
That's true.
With
They'll know some of the
people.
other people. Yeah, that
exactly.
is a good point.
Even if they're not in house, so they will, and they'll be required to put your interests ahead of theirs. So I think that's a reasonable place to start. But you're right. You need a multiple disciplinary approach.
I agree with Tom.
Okay.
Yeah.
And a fiduciary could help me figure out, like, do I amortize like if I finance if I give the terms on the buyout, I could get the interest as well, et cetera, et cetera. I mean, there's just a lot of moving parts.
They're going to help you crunch all
I
those numbers. The CPA is going to help you determine what your best tax direction is, and the attorney is going to walk you through the confusion of the paperwork and making sure that all the I's and T's are properly dotted and crossed.
There's some work to be done here. So,
but I would look. But here's again the key.
Start now, since I have a year to do it.
The key.
Yep.
Go to talkingrealmoney.com/help, because that has all the stuff you need to vet people. You got to vet them, because there are a lot of people who are half lying. They're saying
everyone will tell you they can take care of the situation.
Yeah. But
I got this.
But so many people will say, yes, I am a fiduciary. The key word that has to be attached to a fiduciary is always a fiduciary. Most of the people who manage money in the United States are not always required to act as a fiduciary. As a matter of fact, the last time a study was done, it was 1%.
So you can pretty well see the odds are not in your favor. So again, talkingrealmoney.com/help. Good luck to you.
Thanks for the call.
Okay. Thank you so much.
Take care.
Have a great day. Bye.
855-935-TALK is our phone number, 855-935-8255. Gosh, my voice broke a little bit.
Yeah, you sound like you're 14 again.
I was 14.
There,
so. No, I don't wish.
13.
14,
12,
13, 14, miserable.
Not doing that again.
No, 35, 40 maybe.
Yeah, I was going to say 40. I was going to say 40. I might do 40
but
again.
not teenagers. No. 855-935-TALK. Give us a call. John, thanks for doing just that, and welcome to our little show.
Hey, John.
Hey, Tom. Hey, Don. This is the guy at the old stock certificates I heard. Answer my question on the show.
It's the old stock certificate guy.
He's calling. He wants to make the trade with Washington.
Are you
Mutual
making the
and
trade
Warner
with
Brothers.
Tom for Washington Mutual stock?
That I got it. I'll meet you. We'll get it all done this afternoon. Get everything signed and taken care of.
Okay, well, it's the best offer I've had so far. So, anyway,
Don't take it. Don't.
The certificates are legitimate. They're legitimate, and I had walked them into Charles Schwab a couple months ago, and the person manning the door, waited on us, and he's the least experienced in the whole shop, and he goes, Warner Brothers, oh yeah, they're part of AT&T, and then he looked up like what one share of AT&T was worth, and she goes, oh, it's worth like $32.
The guy's an idiot.
So,
the guy you met at Schwab was an absolute idiot.
I left.
That's not right at all. Not in any way, shape, or form.
I'm going to say something that is almost sacrilege. I am. I'm going to speak sacrilege.
Do I have to hold my ears on this
I am
one?
going to speak sacrilege. The problem is the discount brokerage firms do not have live staffs. They just don't. So here's what I would suggest. You're going to probably end up paying a little bit.
Yeah.
But to find out what it's really worth, oh, gosh, who do you bank with?
$32.
Who do you bank with?
Oh, like I bank with maybe Federal Credit.
No, that won't work. Okay. Okay, what I would look for is somewhere in your neighborhood, look for Morgan Stanley or Merrill Lynch.
Sadly.
I know, I hate saying this, but they will have in their offices trading desks.
They'll know how to do the research to figure out.
They'll know how to do the research because my guess is that one share of Warner Brothers, if again, there was not a subsequent bankruptcy, and I am not aware of one, I went and looked, but if there was no subsequent bankruptcy, then Warner Brothers stock since then has split and split and split.
Right.
They've paid dividends.
Yeah.
They have been acquired by other companies for super califragilistic prices. And so somewhere, my guess, this is an abject guess, is that certificate is probably worth 5 to 6 figures.
That may well be. Yeah. I think that's reasonable. In 90 years, that's probably reasonable.
Absolutely believe that is likely to be the case, which will get the folks at Merrill or Morgan Stanley salivating over this opportunity.
They're going to look at you like, oh, boy.
And then once you get it into your Merrill account or your Morgan Stanley account, immediately liquidate it and take it to your discount brokerage account at Schwab.
Well, no, you got to be careful with that until you have all the cost basis.
Oh, yeah. You got to do all that.
And who owned it and how you got it and all that. A lot of work.
So, but I would eventually then move it out. But they can do it. I was with Morgan Stanley.
$32.
We did it. $32. Yeah, it's not the current price.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
So, those of you who are over 50, which is a lot of our audience, what's your biggest financial regret? What's the one thing you look back and you go, oh, man, I wish I'd done that? Give us a call.
Hadn't done that.
Yeah, give us a call and tell us. We'd like to know. 855-935-TALK, 855-935-8255. I can hear a lot of younger investors saying, my biggest regret? Oh, yeah, Bitcoin at $67,000. That's
It's now at 16 or whatever it is.
Yeah. But we were talking about an article by Brett Ahrens in Barron's, And he
Barons?
He was looking at a survey that was done about the biggest regret of older Americans, financial regret. And we talked about the first two. Number one was not saving enough.
Yeah, 60% of people wish they had saved more.
But number two surprised us, and that was they regretted not buying long-term care insurance.
Yeah, which you make a good point. It may be the fact that they're waking up now at 70 and saying, gosh, I wish I had paid for that 20 years ago.
Yeah, when it was cheap.
Because I can't.
But number three, and this one is really, really interesting because it's a topic we discuss ad nauseum almost.
And people in the industry used to discuss it not at all.
Yeah.
Period.
And that is, the regret is not working longer.
Yeah.
And then number four, this surprises the heck out of me.
Nah, I think this is no.
Really?
Go ahead, say it. No, not at all.
Okay. A third of older Americans regret not putting more money in an annuity contract. A guaranteed
lifetime annuity, because I think people still at 70 wish they had a guaranteed source of income. Now, what they may not realize is they do. They just have to build the annuity or have somebody build the annuity for them. In other words, our clients get money from their portfolios. We send a certain amount every month.
Yeah. That's an annuity. It's just not a guaranteed annuity.
Exactly. So people still think, I'm taking a big, we've already talked about the trade-offs there. I think the next one is more fascinating, and it's getting better from the numbers I see on a regular
Ladies and
basis.
gentlemen, number five.
Number five is 23% of those Americans surveyed over the age of 50 regret claiming Social Security too early. Yeah, it's still 1 out of 3 people that basically take it at about the time they can get it at 62. Which is absolute. And now, all right, if you have to have the money or your health or we're not going to live long, I get that. No argument. But most people just think, I turn 62, I take the money, without considering, many of them, that they're working and they're going to pay a lot of tax on it, without considering that you get a huge raise every month, by the way, that you wait to take the benefit, and that if you wait until age 70, the numbers, we talked about this. At my full retirement age, my benefit is about $3,100. If I wait the additional 3 years, basically, it's going to be $4,100 a month. That is a big difference because it basically is that same number for however long I live.
Right.
Yeah, there's going to be some inflation added, but in a general sense, that's the number. So I'm glad people are regretting this. I hope they're telling their neighbors, look, don't do what I did because that was a bad decision. America leaves billions of dollars every year that should be theirs, but they don't think it through. It's a very big decision.
It's a big decision, but I can see why people lean toward the early. Because we just, sometimes I think about it. I am at FRA right now. I'm full retirement age this month or last month.
I would have said, seeing you today, that you're past that, but that's just me.
Well, I don't look as good as I did before the surgery.
Okay.
But,
you're going to make me feel bad now. Yeah. Come on.
Well, of course, that's my job. But I mean, I've thought about it at times. I go, well, what happens if, I know I have an aneurysm, for example. I may not, why would I can take 3,000 today, over 3,000 today, or I can wait
basically the same. Yeah.
Wait 3.5 years
4.
and take 4.
What?
I can see why that
you
question.
Gotta live the 10 years.
You gotta live the 10 years.
If you don't, then you're going to call us and get mad, and I'm going to say I gave you the best advice I could. Sorry.
Yeah, because that's the next thing they're working on with the iPhone is phone calls from hell. 855-935-TALK is our number.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Because it's kind of critical to your life. You need money. We want to help you get it, keep it, save it, invest it. Not give it to somebody who's not going to give it back. All that stuff. And the best way we can help you is you calling us and telling us what we can help you with. And so you can do that just by calling us at 855-935-TALK. And you can call that number during the show, which is now, or Saturday, noon to 2 Pacific, 3 to 5 Eastern. Or you can call anytime and leave your question on the cloud-based answering machine. There are no more answering machines.
There's not one sitting in the corner going,
no.
Thank you for calling Talking Real
machine.
Money.
I got nothing. Matter of fact, it was funny. I was looking for an audio recorder. Do you know how hard those are to find? Because it's in your phone now. It's a standalone.
Just, you mean like a tape recorder?
Well, except not tape, just digital.
Right, just digital recorder.
They have something. 855-935-TALK. And here is a call that was left on the line. Now, listen carefully, Tom, because he does have a thick accent.
Okay.
And I don't totally, I heard it, but there was other noise, so we're going to try it from scratch. Here we go.
Hey, I received email from the company I work for asking me to enroll in Growing Together plan, saying that I can invest $25 to $500 per month. The investment will be used to acquire notional units. For each 3 units purchased, I will receive 1 free, and the company will guarantee that I will receive back what I put in, so I cannot lose money. Can I have your opinion on that? Thank you so much. Bye.
Oh, this is very complicated. I know what
I
he's
don't
talking
know
about.
that Oh, you do? Okay, I don't know if I know.
It's a stock purchase.
In his own company?
In his own company. And it's basically the notional units are a way to value an
notional.
Yes,
okay.
Notional.
All right. Yeah.
Oh, and then they're convertible into other units that are convertible into stock.
Setting all that aside for a moment, just for a moment.
Yes.
Okay.
Please set it aside.
I work at XYZ Corporation.
Correct.
Right.
Yes, you do.
And my job
is that what they've changed the name to?
That. It was easier to remember.
XYZ Wealth.
My job is obviously dependent on that company, right?
Yes, it is. Your income. Your income.
My income.
Your intellectual capital is invested in your business, in your company.
Correct.
You work for. Yes, I get it.
And now, you want to add in your retirement, your investing, your all the other stuff. That is what this is one of my arguments always about company stock in 401k plans or even RSUs or all the rest of this, because it creates this internal conflict for people. Because if I work there, I don't care how bad it looks for in the aforementioned Washington Mutual. I had friends that did this. They stuck it out to the end. They were sure it would be turned around. Something will happen.
Enron people too.
Because you believe it. Same thing. Right up to the last day. Should we sell our stock? No. So I don't, as a general rule, I know nothing about this particular program, but as a general rule, I don't recommend it.
Well, and here's the thing. Yeah, there may be some upside, but, and the risk, there is literally, there's a lot of risk involved in this because the company promises to make you whole if this doesn't work. Well, what's their promise worth?
Right.
If they go bankrupt, how are they going to pay you? You won't be way up the list of creditors. And you'll be way down the list, as a matter of fact. You'll be near the bottom of the list. Whereas as an employee, if you didn't put that $25 to $500 a paycheck into this, you would be a creditor. You would be a very high creditor.
It's like making a bet on any individual stock. I don't believe in that either. I would take that same money, if you can, and invest in a globally diversified portfolio.
Yeah, this is just a way to gamble. This is just a way to gamble with slightly reduced risk. But it's several steps below an insurance company's guarantee, way below that. And just miles below a U.S. government guarantee. It's not a guarantee. 855-935-TALK. That's our phone number, 855-935-8255. And holy cow, Tom.
Yes. Don't call me a cow.
We have a lot of calls to get to after this break.
Okay. Then I'm here ready to go.
It is the lightning round of Talking Real Money coming up.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Ladies and gentlemen, welcome to the lightning round of Talking Real Money. In this segment of the program, there will be no small talk. We will move from caller to caller very quickly and hopefully answer all that we can in a very limited amount of time, starting with, ladies and gentlemen, please welcome Shirley. Shirley, come on down.
Yes, I have a comment about you were asking people what regrets they have regarding their money.
Yes, ma'am.
I'm a 95-year-old widow, and my comment may surprise you. I regret not having spent more money. When you get older, you don't have too many interests in life, and the government takes your money in taxes. I was thinking I was going to get a raise on my Social Security this year, and because my income is more than they think I should have, I'm going to get less money this year. So there are a lot of drawbacks to saving money when you're young. Spend it and enjoy it while your family is young.
Okay, that's an interesting regret. That's a fascinating.
No,
I
and
agree.
I tell people this all the time.
You live
Our
a life.
clients all the time. Well, and people have a tendency to get in the saving mood. They never can kind of get out of that mode. Yeah, I think you're absolutely right.
Absolutely. Don't spend your life trying to save every dollar.
Yep.
Thank you so much, Shirley. We appreciate that.
God bless you.
Moving right along, Larry, it's your turn. Welcome to the show.
Hi there. I'm 72 years old, retired since I was 56. I went on a medical. I'm in a stable value fund through Fidelity, getting about 2.5% to 2%. I've been drawing on that since I retired, and I got probably $340,000 left. And I'm wondering if should I stay with Fidelity or go with a different company to maybe get a little bit better than 2.5% on my return?
It's not the custodian.
Yeah, it has nothing to
do
with Fidelity. It has to do with the product you're in. You're in a stable value fund. The goal of a stable value fund is to remain stable. The price.
Not move around.
Not move around. But are you willing to either do more work or take increased risk to get a higher return?
Well, I don't not maybe a little risk, but not a huge risk.
Okay, then I think you're really close to the low to no risk. You might want to have 10 to 20% of this money in a globally diversified equity product like the Vanguard Total World Stock Index. However, for the rest of it, just to get you, there are two ways to go. You could go with something like BND, the Vanguard Total Bond Market Index, for the 80%, but that will fluctuate in value.
And it's down 10% this
but
year.
But it's down already. See, you're buying it cheap.
Exactly.
And it's yielding about 4% right now.
Yeah, the yields are up, the price is down, but here's the thing. You're going to have to accept fluctuations if you do that in both the stocks and the bonds.
And never, ever, ever, ever think about selling just because the market's down. If you can't do that, then you got to stay with the stable value, either that or maybe ladder some CDs. And thank you so much for calling, Larry. We really appreciate it. We're going to move on very quickly to James. James, welcome to the show.
Hi, guys. How are you?
Good. What's up?
Good.
Hey, I recently found myself in a position where I have about $150,000 in cash. I sold some toys around my house, and I have a Fidelity investment account through work that I've been investing in for years. I'm 54 years old, and I'm just wondering what you guys would recommend as far as investing that cash.
It is the question. We get that question all the time. Now, how in the world did you get $150,000 for some Legos and
toys?
Trains and things? I'm just
electric trains.
Yeah, electric trains.
I was literally in a barn and found a bunch of pedal bikes, the old cast iron pedal cars, and they were original in the box. And
worth a fortune.
Yeah, they were original in the box from the 60s, and a guy came over to the house and said, I'll take them all. And so he had, a bag full of money, and so I was like, woohoo, yeah, this is a good day.
That is cool. Now, back to the most difficult question we ever get on the show, which is the one you just asked, and someone asked in a previous hour. I have money. What do I do with it?
Now,
that's the very end of the process. And we want to jump ahead and make that the beginning of the process because we all believe that there is a magic answer, which there is not. What do you need this money to do for you? And how much risk are you willing to actually take? How much are you
Ups
willing to
downs.
be scared when things don't go well for you?
Yeah, I think I'm a moderate to high risk investor, and I'm willing to take some risk, but I don't want to be foolish, if that makes sense.
Right, you're not going to gamble. We're not going to suggest gambling.
Yeah, I'm not going to go to the casino and put it all on red.
Well, there's always cryptocurrency or SPACs. There's other stuff.
Here's what I would suggest. Right now, because of our limited time, go to talkingrealmoney.com. Take the risk quiz. It's right there. Take that. Then take a look, because you'll know what your portfolio allocation will be. Then go down the page and look at the 3 funds from 3 groups article where we have mutual funds or ETFs that we think would make a lot of sense, and you can allocate it. The risk quiz will actually give you an allocation.
And you can decide between how much in the stocks, how much in the bonds. The funds are right there. It's easy to do it yourself.
It's so easy. It's a really easy DIY thing, James.
Okay, beautiful. No, I really appreciate your time. I love listening to you guys. I'll go out there to that website and check it out.
Cool. Now we're going to go to Jim very fast. Jim, we have 1 minute.
Good afternoon. I have a quick question about Social Security. We sold a home last year, and we had our income tax, and of course it was in there, and we had all those taxes with it. This year, our Social Security for the two of us dropped about $450 a month. Is that going to be a 1-year thing, or will that continue on?
I think Irma looks at it 2 years back.
They look 2 years back. I think it's 2. I think Tom's right. But yeah, it is a short-term thing.
It is.
You will bounce back up.
Oh.
Next year.
Next year or the year after.
Yeah.
But you will bounce back up. You might want to just contact Social Security online as far as the Irma. But I honestly thought I read 2 years, but I'm not a tax expert. As you guys all know, we're not tax experts.
We got in trouble last time we gave tax advice. So
all right.
Do it again.
Good luck.
All right. You guys are great. Thank
you,
for your help.
Jim. Take care, sir. Bye-bye.
Thanks, Jim. Wow, we got through Shirley.
That was
Larry,
the lightning
James,
round.
Jim.
Wow.
Boom.
And we
Bing,
did it before
bang,
the
boom,
music
bada bing,
came up
bada
even.
boom. Yeah, well done, sir.
Now, remember,
well
you
done
have
indeed.
questions. You can call us 24/7. Just call anytime, 855-935-TALK, or go to TalkingRealMoney.com where you can find all the other cool stuff. And you can also record or type your questions there.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Hey, Tom, I got some money and it just came in and I don't know what to do with it. Can I call you on Saturday and talk to you about it?
I love that question. We get it so often, but here's the thing.
What?
You got to have a plan. If you have if I came into a lot of money, I'd already be able to say it goes here, here, and here because I have a plan.
Because you have a plan.
For my future, you got to have the same, and you need to get it from a 100% pure fiduciary.
Yeah.
You got to get a meeting. You got to get in there. You got to get it right. Absolutely. And how do you do that,
it's
Don?
free. You just go to TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.